So, you did it. You saved up your first $1,000 and you're ready to put that money to work. First off, congrats. That's a huge first step. But now comes the big question. Where does it go? Do you go with the stock market, the classic, time-tested engine that's been building wealth for over a century? Or do you take a shot on the new kid on the block? The wild, high-stakes world of cryptocurrency, where fortunes are made and lost in the blink of an eye. It's the big debate and it can feel overwhelming. But don't worry. We're going to break it all down. No hype, no fluff. And figure out where your first $1,000 should actually go. Quick disclaimer before we dive in. This is not financial advice. It's for educational and entertainment purposes only. Always do your own research before investing. All right, let's get one thing straight. When you buy a stock, you're buying a tiny slice of a real-world business. It's an ownership stake. You're betting on a company, its products, its leadership, and its ability to make money. Think of it as becoming a part owner in a business you believe in. Crypto is a totally different beast. When you buy something like Bitcoin or Ethereum, you're not buying a piece of a company. You're buying a digital asset, a piece of technology. Its value is all about supply and demand, how useful its technology is, and what people think it's worth. It's a bet on a completely new, decentralized financial system. This is where stocks and crypto really part ways. Look, the stock market can be a bumpy ride. It has its good days and its bad days, driven by things like company profits and the health of the economy. But over the long haul, especially if you own a bunch of different stocks, the ride tends to smooth out. And then there's crypto. Calling cryptocurrency volatile is an understatement. It's ridiculously volatile. Prices can skyrocket or plummet by huge amounts in a single day, sometimes because of a single tweet or a new government rule. For some people, that thrill is the whole point. For others, it's a complete nightmare. You just have to be honest with yourself about which camp you're in. Historically, the stock market has been a reliable way to grow your money, averaging returns somewhere around 7–10% per year over the long term. It's the marathon, not the sprint. It's how you build wealth slowly and steadily. Crypto, on the other hand, is the sprint. It offers that lottery ticket potential for explosive, mind-blowing gains. We've all seen the stories of people turning a few $100 into a fortune. But here's the cold, hard truth. For every one of those to-the-moon stories, there are 1,000 stories of people losing everything. That chance at a 100x return comes with a very real risk of your investment going to zero. When it comes to safety and regulation, it's night and day. The stock market is buttoned up and heavily regulated. There are decades of laws, government agencies, and rules in place designed to protect you from scams and keep things transparent. It's not perfect, but there's a system in place. The crypto market? It's still pretty much the Wild West. Regulations are still being figured out, which means there are way fewer protections for investors. This opens the door to more scams, hacks, and people trying to manipulate the market. While the core technology behind Bitcoin is secure, the platforms where you buy and sell can be vulnerable. So what's the verdict? The smartest move isn't picking one side and going all in. The best strategy is all about you, your goals, your timeline, and most importantly, how much risk you're truly comfortable with. For most people starting out, a balanced approach makes the most sense. Think of it like this. Build your foundation first. You could put the majority of your $1,000, maybe $800, into a broad market index fund, like an S&P 500 ETF. That one purchase instantly spreads your money across 500 of the biggest companies in the US and buys you a ticket to the proven, long-term growth of the stock market. Then, if you're feeling adventurous and you've done your homework on the technology, you can add a little spice. Take the other $200 and put it into one of the big, established cryptocurrencies like Bitcoin or Ethereum. This way, You get to be part of the crypto world and have a shot at that explosive growth, but you're not betting the whole farm on it. You've got your solid foundation with a little bit of high risk, high reward speculation on top. At the end of the day, there's no single winner here. Stocks give you stability and a track record you can trust, which is perfect for building a solid financial future. Crypto gives you a shot at the moon, but with the massive risk that comes with it. The best move you can make with your first $1,000 is to be honest about what you can handle. So I'm curious, what's your plan? Are you team stocks, team crypto, or are you splitting it like we talked about? Let me know your strategy down in the comments. And hey, if this helped clear things up, do me a solid, hit that like button and subscribe for more financial guides without the fluff. Thanks for watching.